So a little warning, I know the thumbnail is pretty strong, are you ready? But we need to offer a little bit of realism here. Why I do not think the bottom is in, and also a little psychological trick that I'm going to reveal in this video that may help you when you want to deploy capital properly. There's nothing wrong with buying now, there's nothing wrong with buying at the lows, but if you keep buying every single dip, there's a big problem that you may find in the future if this continues going on for a long time. So if you're new around here, make sure you do subscribe. So let's get into it. It's more about the stock market, but it also is very relevant to crypto, which we will talk about. CPI data. I warned on Monday that obviously the Wednesday print would be relatively interesting. I was expecting it to come in hot, but not as hot as this. This is relatively huge. You got to think, right, the actual result from June for the May recordings was 8.6, and that's a massive jump to 9.1. Huge. Industry leading highs of over 40 years. Huge problem. And you got to remember as well, this does not include stuff like food, which is madness in itself. But I want to talk about something a bit more interesting, what's going to be coming, I think, now more than ever. Already we're seeing it very early. We're expected this between, I think it's on the last week of July, they usually come out. But already news articles and the television shows and all kinds of stuff about the finance are starting to talk about 100 base points in terms of the interest rates, right? So if this is totally alien to you, make sure you join my Patreon and you can understand this in more detail. But reality is, I think the Federal Reserve have to be more aggressive. And I'm going to talk about that in more detail in a second in terms of what's happening with quantitative tightening. Huge important thing. We need to kind of stop people from investing, basically. Stop people from investing, spending money, going out, doing stuff to maybe make things a little bit easier on the pocket, i.e. inflation. That is one of the main reasons why we've got inflation, is because the ability to encourage investing went a bit too far, and that's what we've got this horrible result. So going from 25 base points to 50 to 75 up to 100 very quickly is obviously of some sign of aggression, but I do think it needs to happen pretty soon. You got to remember as well, there isn't a meeting in August, so it's going to be July, then into September. So bear that in mind, right, when you're thinking about it. Anyways, let's talk about that aggression. Quantitative tightening, what is it? Mentioned in the last video, feel free to watch it, but essentially drawing money out of the market, not buying bonds, pulling liquidity out, which is going to be a problem. Now, the one thing that is happening, and I've highlighted it already on the screen here, there's a lot of money coming out. A lot of money, right? However, it's going to be increasing to 95 billion. It's going to double from September onwards. They've got $8.9 trillion in purchase assets on their balance sheet. That is going to start to shrink very soon. That is a lot of money to come out of the market, essentially. So you got to think, every single month, that is a lot. Billions coming out of the market, right? So what's that going to do? Well, it's going to affect how the stock price does. It's going to affect how things just happen in the market in terms of liquidity as well, because you need liquidity to create opportunity. This is going to create fear, and fear is a big problem. But another big fear is also what's coming out very soon. We're getting into earnings season. Every quarter we have this, right? Always happens every single quarter. Without fail, we tend to get it. July, August, September, cool. The problem is October, November, December, in my opinion. However, a lot of banks are doing their earnings today, moving on into the likes of Monday and stuff like that. I think we've got like Netflix, and I think we've got more Bank of America. You know, we've got Google, Amazon, Apple, all coming out. If they're starting to show that their earnings are getting weaker, that would indicate that buyers have changed their pattern of behavior because they can no longer afford certain things due to the increased inflation, the lack of wage kind of rises in that time period. It's a hugely important factor. And the biggest thing, it's not just technical analysis or fundamental analysis, it's often reaction. Reaction of news, reaction of people, the mass of people, fear, greed, all kinds of good stuff will always move a market. That's where the problems lie. So for me, I'm not too worried about Q3, I'm more about Q4. Why? Q4 is hugely important. It'll be the first proper quarter with quantitative tightening going for it, and also you got to think the high inflation numbers. Let's see what that previous quarter would give us. It'll be very, very interesting to see where we are right now. So, what is a recession? It's a perfect storm, really. It really is a perfect storm of what we've got right now. In terms of this kind of recession here, and this is, if you're going to narrow it down to like a couple of sentences, it's essentially this: economy will struggle, people lose work, and companies will make fewer sales. Overall, the economic output will decline. What's happening in China? They've just had a lockdown. Copper has greatly reduced in its value, and there's also been a little bit of a liquidity crisis with 4 of their banks in China. That could indicate something to look at, just a point. But moving down, other causes of recessions. Economic shock. What have we got right now? Huge inflation, quantitative tightening. It's a bit of a shock, really. Debt. We have got, as I've mentioned before, $8.9 trillion on a balance sheet of essentially stuff that's got to come out the market because it was kind of belt fed out due to a money printer during quantitative easing. That is a number that we need to kind of reduce, and that is what's happening. Asset bubbles. The stock market is in a 13 to 14 year bull market. That's a problem. Cryptocurrency has just came out of a bubble, and you could probably argue it will go lower. Too much inflation? Yep. Too much deflation? Okay, problem. Why? We've got a lot of inflation. What's going to happen over the next few years as we try and get it down? Well, the chances are we may well overdo it. We may well overdo it, and we may well go far too aggressively, and it may well create a lot of deflation. That's a problem. And then you've got technology or technological kind of changes. That may not be a big problem, but you've also got to think that bottom line is jobs. Is, more AI? Is self-service checkouts? Robotic sort of stuff going to change behaviours? Remember COVID? Remote working, that's changed a lot of people's mindsets. What about if we do lose people? Obviously, worst case scenario, what about if people do lose jobs and then companies find a way of recovering that by technology? Who knows? That could be a huge problem. So let's look at the charts, right? Let's talk about something really, really psychological, right? And I want to talk about it, and I think it's very, very important. And I want to cast your mind back to these tops on Bitcoin. We'll look at S&P 500 as well. When you think about it, these periods up here, right? I want you to cast your mind back and think what you thought, right? And feel free to comment if you want to, how you felt. Because I think this is a huge, important psychological thing. Most people, when it was up there, you thought it would carry on forever. Most people. Now, this is where it all comes in terms of timing. When did you buy? How much capital did you put in? And what asset have you got, right? Or what have you been listening to on YouTube, essentially, right? Now, most people would have thought this is going to carry on going up. We're going to carry on going up to those dizzy heights, 100k, 200k, 300k, wherever people wanted it to go. Now, in my mindset, that is the perfect time to take profit, which is why this video is going to be very, very helpful. If something's gone up 10, 20, 30, 40, 50x, whatever it may be, and you haven't taken anything off the table, there's a problem. Now then, you're probably wondering, why is this any relevant? Why is this, who cares, right? You got to look at the other side of it, right? If you think of it the other way around now, so you could invert the chart if you so wish to, if you want to do it that way, that's kind of what we're looking at. Now, what you are thinking here is very well, obviously ignore the arrow, the bottom. Okay? You need to think about this. When you think that Bitcoin or any asset, whether it's a stock, whether it's an index fund or whatever, and you think in your head it's never going to recover, there's a good chance that could be the bottom. This is what you need to look at. This is what you need to figure out. So, again, think about it this way. I personally do not think, so about Bitcoin only here, that Bitcoin has fallen enough to shake enough people out. That's my personal thoughts. Why do I think that? Why do people care? It's more to the fact of the history of it. We've dropped a lot lower in previous cycles. I know in the previous cycle here we dropped a similar sort of amount, around 82, 83, 84%. Now, in terms of where we have right now, in terms of where we are currently, we're currently around 69%. Which, yeah, it's a horrific drop. But there's still that extra little bit that could bite a little bit more. This is why I'm thinking this is the interesting point, right? So when we're talking about psychological stuff, we've got an area here of interest where we may well find, if we get into this area, it may well be the danger zone where people will start to give up and get shaken out, right? Makes sense? Good. So what you need to do is, if you believe in your own personal kind of opinion that you have bought something good and low, that's fine, right? That's totally fine. I have no objections, right? But if you think to yourself that we could go lower, that doesn't mean just, I'm not going to buy until we go lower. Be calculated, but do not buy every single red day because you will run out of money. I think now it's at an element of time, not so much price level. The time is quantitative tightening, getting inflation down, seeing where the stock market goes, which I will cover in a second. However, a lot of people will give up. If you get to a point where you think that crypto will not recover, for example, or your individual stock won't recover, or whatever won't recover, not so much in terms of the fundamentals because you've forgotten all that, but the price, there's a good chance that would be a nice place to buy. Personal thought, and I think it does work, and it's definitely helped me in the past, certainly buying in 2020. Trust me. Anyways, let's talk about something simple. The S&P 500, right? This is the chart that I've got. Now, it looks mental. I know. Little green bars. This, by the way, worst case scenario, right? Worst case scenario. Very unlikely that's going to happen. However, looking at these levels here, this 618 level, this was the COVID crash bottom, by the way, I think we could readdress. We could be looking that this area from this COVID crash above could be the melt up. That could have been the melt up there, and that could be why people were talking about it quite significantly. That could be just wiped out completely, and I think it will. I think we have got to go a lot lower. We are at a level of support, which is fair enough, but ultimately, as I've said, going back and watching again through this video if you so wish to, there's a lot of things going to happen over the next 2 to 3 quarters, which is going to shape where this market will go. So you trying to buy as low as you possibly can on your cryptocurrency asset, great, do it. But the reality is, we could be in a situation for the next year or two where we're waiting on this to just bottom out. And that is where the max pain will be. That's where the shakeouts will be. And that is when you will be at the point of going, I give up. So, psychologically, are you ready? I don't think people are. And this is the thing. Before I end, any rally that will go up is either an opportunity or a place where you'll get destroyed. That is the worst thing. Anyways, be back on Monday. I will see you again very, very soon. If you like my stuff, give it a like, give it a share. And I know it's a bit doom and gloom, but realistically, it's finance.